Welcome to this strategic assessment of the Chipotle Mexican Grill chain. This project is presented by Team Chipotle of the UMass Dartmouth MGT 490 Strategic Management Fall 2018 course. Members of this team include the team leader, Annie Flynn, and contributors Steve Corzin, Andrew Rodriguez, Connor Russ, and Matthew Townsend. For the next few minutes, we will explore Chipotle from a strategic management viewpoint. Enjoy the presentation. Chipotle Mexican Grill Incorporated is an American chain of fast casual restaurants specializing in tacos and mission-style burritos. Its name, Chipotle, derives from the Nahuatl name for a smoked and dried jalapeno chili pepper. When Chipotle first opened in 1993, they were focused on serving quality food using fresh ingredients and classic cooking techniques, all served in a unique dining setting which they still continue over 25 years later. Under the newly appointed CEO, Brian Nicole, Chipotle defines its mission to cultivate nourished communities where wholesome food is enjoyed every day. To complement their mission statement, Chipotle established the slogan, Food with Integrity, which Chipotle defines as their commitment to finding the very best ingredients raised with respect for the animals, the environment, and the farmers. Chipotle engages in a wealth of socially responsible activities and behaviors. Chipotle has begun a campaign called the Chipotle Local Grower Support Initiative. To maintain the highest integrity in the purchasing, preparing, and serving of their food, Chipotle buys from local farms to achieve maximum freshness and for the purpose of supporting small local businesses. The main goals they would like to achieve through this program are educational and financial assistance for local farmers and to develop new local farmer partnerships. Sustainability at Chipotle deals with people, food, animals, leadership, and the environment. Their aim is to create a quality experience for customers and local farmers and a welcoming work environment for their employees. Chipotle has been compiling a sustainability report at the end of each year that accounts for the progress towards goals that they have achieved, what they have not yet achieved, and what goals they failed to achieve in the previous year. In 2017, Chipotle was able to add more women to their management teams and restaurant staff, increase the pounds of food purchased at local farms from 16 million pounds to 26 million pounds, and supported 69 local farmers, whereas in 2016 they only supported 23. Chipotle is also on track with many goals in environmental sustainability, most of which include a plan to decrease emissions, reduce waste, and increase energy efficiency. They established the Harvest program, which takes excess prep food and delivers it to local community food pantries and food banks. Currently, 16% of Chipotle restaurants participate in the Harvest program, with the goal of 80% by 2020. On April 9, 2018, Chipotle also announced its commitment to divert half of its restaurant waste to landfills by the year 2020. Such a large accomplishment required the establishment of new best practices on dealing with food and waste. Chipotle's business strategy is a focused strategy approach in the restaurant market. Their focus is both on a low-cost and a differentiation-focused strategy. Chipotle has done an interesting thing where they attract customers of the low-cost realm by offering the best bang for the buck and keeping operating costs minimized. This concept helps Chipotle leverage their cost drivers to maximize profits, thus creating a higher value to the company. Chipotle also establishes themselves as providing both wholesome and nourishing food that sits atop the quality pyramid compared to other fast food chains. The ability to provide quality fresh food in a unique environment sets up a focused differentiation strategy appealing to the preferences of that well-defined group of buyers who like Mexican food. In 2015, their reputation took a major hit as an E. coli outbreak affected their restaurants and customers across 9 different states, spanning from California to New York. Not only did this take a toll on the Chipotle brand, but its financials as well, as Chipotle's sales and profitability took a major hit lasting well into the summer of 2016. Yet another incident occurred in July of 2017 when a norovirus outbreak was linked to a Chipotle in Virginia. These outbreaks were identified as a threat to the longevity of the company. In response, the most visible change occurred in Chipotle's top leadership with the appointment of new CEO Brian Nicole. Other changes included commitments to sustainability, improved supply chain oversight, expanding locations, and investments in digital platforms. These initiatives are all planned to help improve food quality and safety, customer experience, market share, and profitability. With the E. coli incident securely in their rearview mirror, Chipotle has established three goals moving forward. The first goal was to focus on operational improvements by reorganizing the store management structure to improve focus and leadership development and training. The second goal has proven to be successful regarding the establishment of digital ordering and catering. Mobile ordering was up 50% over previous year, ringing in a record 8.6% of total revenue. The last goal recognizes that some of Chipotle's restaurants need upgrading, so $50 million in capital has been invested for improving efficiency and the customer's environment. Political factors like increased oversight and regulation of the food industry is an issue facing Chipotle as it develops its growth strategy. Under the Food Safety Modernization Act of 2011, the USDA and FDA have increased their oversight of the food service industry in response to outbreaks of foodborne illness. Chipotle's outbreaks have been traced back to suppliers and not to poor restaurant practices, but these incidents came at a high cost of declined sales. The current economic environment of Chipotle is a positive factor for the company. Rising menu prices and increased sales have contributed to a rebound in the price of the company's stock, which has risen 68% in 2018. Chipotle also opened 35 new restaurants in the quarter and continues to expect over 130 new openings for this year. Chipotle has also faced economic pressure from investors with large stakes in the company. McDonald's was the largest investor in Chipotle for years, but they were pushing to add directives that went against Chipotle's plans. When sales at McDonald's locations began to decline, they parted ways. Social impacts from a variety of factors represent several positive opportunities for the business as shifts towards healthier diets are increasing rapidly. The Chipotle for Real campaign focused on Chipotle's commitment to non-processed ingredients, making it a strong opportunity for the business as its founding principles of fresh, non-processed food at a low price are a perfect match with the current market trends. This ideal match between guiding principles and market demands is a primary driver of growth for this company. Technological factors that are impacting the industry are automation, mobile payment, and ordering. Chipotle has embraced the use of mobile technology to enhance customer convenience as consumers appear willing to pay a premium for these services. Environmental considerations will certainly be an area of focus for Chipotle as it relies heavily on natural products, produce, and outside suppliers. Some of the current issues involve waste and supplier management, so success in these two operational areas provide a valuable advantage. Legal issues that could threaten Chipotle include lawsuits from various entities and regulatory actions by various federal agencies. It is crucial for Chipotle to formulate an effective strategy regarding these legal issues as they could irreparably damage the brand. Chipotle and the Five Forces model. The threat of new entrants to the restaurant industry is high, but with Chipotle's urban locations and high-traffic suburban retail market, they have created a sizable barrier to entry. The scale of the company's buying power, access to optimal suppliers, its advertising and marketing ability and resources, as well as its capital available from investors, allow it to operate at a scale that would be very difficult for a new entrant. The power of suppliers has always been an obstacle to the company and is a significant factor in the restaurant business. Chipotle has high demand for commodities which experience high levels of volatility. This high degree of reliance on suppliers allows a supplier to exert considerable leverage. Chipotle faces an industry where the buyer has a higher degree of power than the company. The fast casual restaurant is a standardized industry, so the success the company experiences in differentiation will be critical in retaining customers. The threat of substitutes is likely the greatest threat the company will encounter as substitute products and sellers in the food industry are vast. Meal services, home cooking, and many other restaurants or food sources can serve as a substitute product and will continue to encourage competition as well as lower overall profit margin in the industry. Rivalry and existing competition in the industry remains high and is continuing to grow. Chipotle has carved a niche into the market in the fast casual segment, and its brand is well regarded, and its ability to offer the freshest food at a good value has carried it to this point. Chipotle's three chief rivals are Qdoba, Del Taco, and Taco Bell, as each one offers a similar product, fast food, with a Mexican-influenced twist. Throughout the process of assessing and comparing the competitive strengths of Chipotle and its chief rivals, it has been found that Qdoba and Del Taco had the lowest overall weighted strength ratings. Taco Bell, on the other hand, is a very strong company with thousands of locations in America, with an estimated workforce of over 175,000 employees, which is far above Chipotle's count. The menu items at Taco Bell, in comparison, are also sold at lower prices, but Chipotle still remains stronger in annual revenue. By the end of 2017, Chipotle had over 2,400 restaurants, 37 located outside of the U.S. Mexican food is not necessarily popular outside of the region, but its basic ingredients, bread, meat, cheese, and rice, are foods that are common worldwide. An international strategy is best suited for Chipotle thanks to minimal pressure for local responsiveness and cost reduction. Chipotle is successful because of its differentiation, so trying to conform to international locations might take away from Chipotle's identity. Let's take a current look at a SWOT analysis for Chipotle. We'll start with Chipotle's strengths, starting with the turnaround from the E. coli outbreaks since Brian Nicole began as CEO, their focused menu, and finally, their innovation specifically with digital ordering. Chipotle's weaknesses include their history of E. coli outbreaks, leading to a bad reputation. The economy is currently in a time of transition, and Chipotle's low profit growth compared to industry and sector. Where do Chipotle's opportunities lie? In the new executive management's teams and headquarters. They are branding to be more culturally relevant, and the current economy is in expansion period. Finally, the threats that Chipotle faces include the fact that their food safety is now under a microscope. There is great competition in the market, and Chipotle is dependent on local U.S. supply markets. The ability to focus on providing high-quality, healthy foods prepared in a sustainable way is central to the Chipotle brand. Serving high-quality food while still charging reasonable prices as the unique value proposition is one of the key parts of the overall competitive advantage Chipotle is working to maintain. The company has also trademarked the phrase responsibly raised and is pledging to apply it to all of the meats used in its restaurants. These products will conform to several criteria the company has established that govern the use of hormones, chemicals in its meats, and treating animals humanely. Chipotle's customers always know exactly what they are eating because the food is prepared directly in front of them. The employees give each customer their undivided attention and service of the highest quality. Chipotle relies heavily on a positive experience that is the foundation of support among its customers. A significant opportunity is to take advantage of delivery as a brand new service offering. If Chipotle increased its workforce and invested time and money into delivery, they could easily expand business and attract new customers. Chipotle has successfully rebounded from several mistakes regarding food safety and is still aggressively increasing market share. The brand enjoys strong consumer loyalty and represents some of the sought-after consumer wants, such as sustainability and a natural product. The company has also managed to succeed in a highly competitive industry by sticking to its core principles, with no sign of changing their current path. As Chipotle faces a market filled with challenge and risk, it is resorting to what it does best to ensure its success: to cultivate nourished communities where wholesome food is enjoyed every day. We hope you've enjoyed this strategic assessment.